Right, ladies and gents, welcome back. Today I'm going to be showing you every single trade that I've taken within 2026. One, for full transparency, and two, to show you exactly why diversification is absolutely paramount within these markets. So we're going to go through all my data. We're going to see where I'm at R-wise. R is what you risked. On various different accounts, you might risk $100 on one account, $500 on another account. That is just labeled as R to keep things very simple and very well tracked. So we're going to dive straight into this because I don't want to waste your time. And we're going to look at my data sheet. Now, as you can see, I've highlighted here a monstrous loss streak that was at the end of Jan and the start of Feb. Now, this loss streak looks a lot worse than it really was because I diversified. I had it split up between futures, Forex, models. Different accounts trade different models. Different accounts trade different sessions. Obviously on futures and Forex, I'm not trading the same accounts on futures and Forex. They're split up. So this loss streak here was bad, obviously. It was a 10 loss streak across all models. But that was not a 10 loss streak on one account. That is not how things work. So what we'll do is we'll just come back down here to the most recent date. So we are currently up 11.98R for the year across every single model, every single pair that I've traded. And if we look up here, we will have January was green, February was green, March was green. We've had the split here, so Forex was pretty much break even in Jan. We got 2.26R on futures. Forex did pretty well in February. March, we are still only a week into March, so this is not really a true data set for March. Yes, we're up 6R now. But I could not tell you what's going to happen at the end of the month. Because the thing about trading is completely and utterly unpredictable of when you are going to get your winning periods, when you're going to get your losing periods. You can look at the back-tested data, but you don't know when that winning period is going to come. You don't know when that losing period is going to come. So what I'm going to do here is we can see here that I had started off, if we look at the R counter here, this is basically a stack of all the R that I made throughout the year. So we were at break even and we came up. We had this loss streak here, came back down into the red zone, and then we are now up in the green zone. So what we're going to do is we're going to actually split up all of this data here into different models, Forex and futures, and we're just going to take a little look and see what I mean by that 10 loss streak wasn't as devastating as you think. So let me quickly just create a filter here. So we can just split it. So we'll go through futures first on the LRV model. So now, ignore the R counter because this is not accurate. We are going to look here. So on futures for the year, if I drag this down, we are up 3.39R so far. Now, that monstrous loss streak that we saw before, if we just drag down here, that actually only had us down 1.74R on futures. So that big area where it's like losing on all accounts, it's obviously not brutal on the mental because I've done the back testing. I know in the models there's going to be a losing period. And if it happens to be that all accounts are going through a losing period, it's not the end of the world. Sometimes it's just going to happen. You just got to deal with it. It's part of being a trader. If you don't want to lose, get into another game, maybe get into sales or some shit. You're gonna always lose in trading. You just have to go through them periods and roll with the fucking punches, bro. You got to roll with the punches. Just play it out. So if we have a look here for the year, we are obviously up 3.39R. And then if we also, this is another thing I do. I do not trade all of my futures accounts on London and New York. So what we can do is we can filter this down even more and look on London. And if we have a look here, I'm up 4.75R on my London accounts. There we go. So we already know that on London, my London accounts, I'm up 4.75R. So now, let's have a look at the New York accounts. What are the New York accounts saying? New York accounts are down 1.36R. Now, diversification. London accounts are doing really well. New York accounts are down. It doesn't matter because I've got these two different accounts, two different sections of the model firing. This is why diversification is so goddamn important. You have to diversify within trading. It is key. It's paramount. So what we're going to do now is we are going to look at the full mech model, which I teach completely in the bootcamp series. All these other models, the LRV and the hybrid, are not taught for free on YouTube. Unfortunately, you will have to either apply for the VIP in the description or sign up for my one-to-one if you want some real intensive one-to-one sort of training. Now, I really don't know why, but the recording just conked out on me, so I've had to re-up that whole fucking segment. So we are now on the mech model. For the mech model, I've only just added New York to the rotation purely because I got a new account on the MT5 and I thought I'd just add a New York mech account on there just purely to diversify further. And so what we're going to do, we're only really going to look at the London data because like the New York data, 2.54R, but it's only 2 trades as the sample size, so it's not ideal. But here we go. We got 1.22R so far for the mech this year, which isn't exactly amazing. It isn't the worst, isn't the best, but do you know what? 3 months, like it's only been 2 months and a week. The stats take time to roll in. You have to let the probabilities play out over a long period of time. So I'm really not fussed. And the fact that the R counter is just going up and up is obviously a great sign, but it can go back down. It can then come back up. And at the end of the year, the R counter will be looking juicy. So what we're going to do now is we're going to go through the hybrid variation of the model. And this is I've got I basically trade this on both accounts purely because the trade frequency is lower. It doesn't seem like that because it's kind of been on a bit of a consistent heater with the hybrid and aligning just throughout, so we were able to trade it. But if we look at the hybrid data here, we are up 4.83R so far this year, which is bloody banging. So them accounts are looking pretty tidy. Now, I'm pretty sure that is every single model, every single trade completely and utterly covered. So what we can do is we can just come back in here, feast your eyes on it one last time. And what I'll be doing going forward is just the weekly recaps. Will be reinstated every week on the weekend. I'll go through all the trades that we took that week. I'll actually break them down on the charts as well. If they're mech trades, LRV trades and hybrid trades will not be broken down, unfortunately. Sorry, folks. But that is the big Nez, and I hope you took from this video one thing, which is... Actually, no, I hope you took 2 things. One, diversification is absolutely critical. Like, even if you only have watched a bootcamp and trade the full mech model, diversify it in any way you can. And then number 2 is journal your trades. There's a reason why I'm showing you this data, and it's because I want to look at it and analyze it at the end of the year once I've got a good sample size and see if any adjustments need to be made after a year, okay? Not 1 month of data, oh my God, we went on a losing streak, I'm going to switch models. Nothing like that. Not going to switch models, just change the diversification. If it's more optimal to do, say, a different type of diversification, I bloody will. So I hope you guys enjoyed. I shall catch you in the next one.